All right, welcome here to Module 2. We are ready to begin looking at some fundamentals of hiring and looking at what some employee type rights and what the employer might have to needs to do in certain situations to avoid discrimination. And that's gonna be more of like part one. What's an employee? What's an independent contractor? Um, and then we're gonna look in part two, we're gonna look more at FICA. We're gonna look at Social Security, how that's handled. And we're going to begin to look at what Form 941 is. And we're gonna actually start completing that once we get into week 3, module 3 of this class. So the quiz and the lecture notes are broken into 2 parts. So the quiz and lecture notes first will follow this one. The first part 1 will follow this set of notes. Most of the answers in the quizzes, like you've seen in week 1, they can be found inside these lecture notes. Some of them you might have to do a little bit of searching for. Some simple Google searches should suffice to find most of the answers. All right, let's just jump in here. The first thing that in payroll that you've got to begin to understand is what is the difference between an employee and an independent contractor. And then once we look at who's an employee, then we're going to be able to jump into the FLSA, which stands for the Fair Labor Standards Act. And this was put in to protect employees from potentially being discriminated against or not being paid accurately for time that they worked. And so the first thing we need to figure out, though, is who's an employee. There's a broad general term that says in the common language, common law, that says basically if somebody can controls what's going to be done and how it's going to be done, then you're considered an employee. But it can get to be a little bit more technical than that. That's just the broad overview. Independent contractors, when you think of an independent contractor, think of somebody that comes to your house that you hire basically from a phone book. You looked them up online and you wanted to find a painter, and they work for themselves. Whereas somebody that works for a painting company and then comes to your house, they are a part of a larger company. They're controlled by this Paints R Us company, perhaps, and they work for them. And then you have hired out Paints R Us. Whereas if you just hire Joe Clark from across town, Joe Clark would be an independent contractor. He doesn't work for Paints R Us. He just works for himself. Joe Clark would provide his own painting supplies. He would have his own brushes. He determines how the painting is going to be done. He determines on how things are protected. If he has maybe insurance, he'll have to have his own. Whereas this Paints R Us company will have set guidelines, and they'll say, all right, when our person comes in, they're going to do this, this, and this, and then they're going to have this type of equipment, and we're going to use this type of paint. Independent contractors, they determine what they're going to do, how they're going to do it. Some of the things that a court is going to look at, and there are some court cases, and I have these attached in the module 2 inside the learning activities. We're not going to necessarily go through these in a whole lot of detail, but there are a couple court cases that go into detail about companies disagreeing with the IRS on if somebody was an employee or an independent contractor. Or maybe the employee disagreed with the IRS and thought that they should have been considered an employee, but they're actually an independent contractor, and they are fighting on how much taxes they need to pay. So what the IRS and the courts in particular are going to look at are a lot of times between 7 and 9 factor questions. And here are some of the ones that they're going to look at. If you're an independent contractor, basically you have the ability to hire and fire people to whatever you feel is necessary. You don't have to go through an HR department and have it approved or denied. You're going to determine how the work is done. Like I said with the painting, you're going to determine the steps that you take. You don't have to follow the company steps. There is really no company that you have to follow. You're going to work when you decide you're going to work, and when you and your client agree that things are going to be done. You're not going to necessarily work when somebody else tells you to work, the company. You're going to have lots of different people paying you, hiring you out. You're not just working for Paints R Us. You are working for yourself. You're going to have lots of clients. Whereas Paints R Us will have lots of clients, but you work for Paints R Us and you do the work on their behalf. A big one for independent contractor is how you're paid. If you're paid by the job, you're more likely to be an independent contractor than if you're paid hourly. You're most likely probably with a company and you're going to be an employee. Make your service available to the public. So like an independent accountant can make their services available to all types of companies. Whereas if I worked for Eli Lilly, I would only do the books for Eli Lilly and I wouldn't look at other pharmaceutical companies. Having the profit or losses is another biggie that's going to set you apart from an employee or an independent contractor. If you work for a company and you're paid hourly, and if it takes you 10 hours to complete the job, whereas the company only thought it would take 5, you're still getting paid. You're not losing money. You're going to get reimbursed for those supplies that you use, different things like that. Whereas if you go in and make an estimate with one of your clients and you say you're going to charge them $500 because you think it's going to take you about 5 hours, and so that includes your labor and any maybe miscellaneous materials you need, supplies, and then it ends up taking you 10 hours, you may actually have a chance for a loss. Maybe you have extra supplies you had to buy that you didn't think about. You ruined some of the supplies, maybe through your own fault. And now instead of you being paying yourself $80 an hour, you're only going to get paid $40 an hour. Then when you have to pay for your insurance and all that other stuff, you could actually come out behind. So that would be a chance of having a loss. Another big one is if you furnish your own tools. So if you have to come with your own supplies, you're probably going to be more in the category of independent contractor. But not any one of these will set the tone that you are automatically. You have to basically have more than half of these criteria to be an independent contractor. If you're ever unsure, if you're basically a company and you're hiring somebody and you think, should I treat them as an employee or an independent contractor? And you don't know and you really want to do it correctly, you'll want to file what's called this SS8, and you can easily search that in Google and fill this out, explain to the IRS what this person will be doing, how they'll be doing it, answer some of their questions, and they'll come back with a determination on, yep, this should be an employee, or yep, this should be an independent contractor. Treat this individual. A few definites out there that are always going to be independent contractors are licensed real estate agents. This is one that before I bought my first home, this one didn't really make sense to me, and I didn't even realize it at the time back when I was in my mid-20s. And that licensed real estate agents can easily have a loss. They're not necessarily paid per hour. Actually, they have to pay their employer who they work for. They say you work for Remax. You may have to pay $300 every month to Remax to be able to use their name and their office space in order for you to generate clients. Now, if you don't sell any houses, you actually have a loss. You're out $300 and you didn't make any money. But if you're good at your job, then you may sell 2 or 3 houses in a month and you'll actually turn a nice profit based on the commissions that you make. Now, you're still going to have to share those commissions with Remax based on the upfront contract that you sign with Remax. I can just get a couple others here. Companion sitters, they are considered your employee if they earn at least $2,200 in the year. That means you have to start taking out taxes out of their pay. Or if they work for you over 8 hours per week, they're considered definitely your employee at that point. So they got to be paid overtime, all the kind of things that happen with being an employee. So let's get into that now. If you are an employee, or if you're the employer, there is this, the Fair Labor Standards Act is out there to help protect the basic rights of the employee and give out the responsibilities to some of the employers. Now, you'll know that if you're covered, not just anybody is covered by FLSA, but it doesn't take a whole lot to get covered by them to be under the umbrella of the protection if you're an employee. So any mid-sized company and above is definitely going to be covered. As long as you meet the few criteria, and you'll see what I mean. So for you to be protected and for everybody in the company to be protected, only 2 things have to be met. One, you have to have 2 people in the business who work in interstate commerce. You might think, okay, I don't even know what that means. Interstate commerce, there's not a lot to it. Basically, if you can just read this here, if you buy or sell or do anything that moves products or deal with people from different states, then you are automatically in interstate commerce. And one of the key definitions that helps define this is basically if you're along the interstate, if your business is along the interstate, you're going to be involved in interstate commerce. You're going to have lots of customers coming from different states just by your access to the interstate. There are very few businesses these days that don't deal with interstate commerce, so almost everybody meets this criteria. If your products come from a different state, then you're dealing with interstate commerce, or you sell to another state, you're in interstate commerce. There may be a few small stores that don't. Say like you have your own mowing business, you only mow people within your community, and you're in the middle of Indiana. There's a good chance you may not be in interstate commerce. Yeah, you bought your tractor from out of state, perhaps it came from somewhere else, but that's a kind of a one-off. You don't normally buy tractors all the time. You have a tractor or a mower and you use that year after year. You may not be in interstate commerce at that, but most other type of bigger operations are going to be involved in interstate commerce. The only other criteria to be covered under FLSA is your business has to have gross sales of 500,000. Now that sounds like a lot, and it is, but for any mid-size, small to even small business, if you have, I would say even if you have 5 or more employees, you're probably going to have gross sales of at least 500,000, because to have 5 employees, you've got to be able to pay them and their benefits and all the other expenses that come along with having an office. So you're probably going to have sales of over 500,000, even a small business with 5 employees. And that's just if you have regular employees and not highly paid ones, like at a doctor's office where you have a couple of physicians, perhaps, who are going to be definitely going to get you to that threshold real quick. So it doesn't take a lot to be covered under FLSA. I'm going to scroll down. You can read kind of the overall gist of interstate commerce there, or you can get the official definition in the link I have. An individual can still be covered under FLSA even if the entire business isn't, because well, maybe the company there's only 1 or 2 employees and the company only generates 250,000 in sales. So still a lot, but doesn't quite meet to that threshold. At that point, you can still be covered if you yourself deal in interstate commerce. If you deal with interstate commerce, then you yourself are covered, where the other employees who don't deal with interstate commerce would not be. So you do the ordering or the selling of goods across the state, or you talk to the people that are outside from different states, you would be covered, but maybe not the other employees. Again, it's hard to get to that point. Most companies are going to be covered. So what if you are covered? What's that mean then? Well, these are the 5 things we're going to look at down below, that some of the rules that the companies have to follow if they fall under FLSA. One of the things we got to talk about is, well, what is a wage? What's considered compensation? And you can go through and see that most of these are pretty common sense. Your normal salary or hourly pay, depending on how you are. Commissions, bonuses are all included. Pay that you get for when you leave the position, or if you get fired, sometimes you still get a severance pay. Anytime that you're on call and you might get paid, that counts. What's not included as wages here, if you ever get hurt on the job, that's called workman's compensation. That's not included as normal wages. Other things in wages that definitely aren't included that you can kind of tell, but just in case, child support. If you ever, if somebody dies and you receive life insurance, that's not considered wages as either. Those are something, it's something else. It's not taxed. So all of these items here are not taxed to the person receiving them. If you're an employer and you fall under FLSA, or even if you don't, you should follow these rules. You need to keep your time cards, your time records for at least 3 years to show how long somebody's worked and what they're paid per hour. Note that the FLSA does not require sick or vacation time. You do not have to provide that. Most companies do, but you do not have to. You do have to be paid for all the time that you worked. Companies have to set it up and then stick with it that says, all right, no, when you work, we're going to round it to the nearest 5, 6, or 15-minute interval. So if you work only 4 minutes over, they may not pay you. But if you work 6 minutes over, then you're going to be paid basically 1/6 of an hour if you were on the 6 minutes out of 60. Or they could do it by 15 minutes. So every 15 minutes you're going to get that much pay on your hourly rate. One of the terminologies that gets butchered a lot, and I want to make sure that people understand and can set others right who don't say it right, is when you get paid, what's it called? Is it bi-weekly or is it bi-monthly? Well, one way to think about it is just think about your local department store when they have their sales. They'll say a semi-annual sale. And you think, okay, semi-annual, that means twice a year. So always, when you think of semi, think of twice per. So if they say semi-annual, it's twice per year. Or if it says, in this case, when pay, it's usually semi-monthly. So that means twice a month. You're paid on the 15th and the 31st. Whereas you wouldn't say, I'm paid semi-weekly. I can't think of any company that pays twice per week, where you're paid every Wednesday and Friday. That would just be a complete hassle for any payroll department to have to do paychecks twice a week. It just doesn't happen. What you also wouldn't want to say, I'm paid bi-monthly. Ooh, that wouldn't be very good, because then you'd get paid maybe at the end of February, and then you don't get paid again until the end of April. So that would be every other whenever you say bi. So most of the time when you're paid, it's bi-weekly. You're paid every other week. So if you ever find yourself in those, like, how am I paid? Am I paid bi, which means every other, or semi, twice per? And I always think it's easiest for me to think back to a department store sale. I'm paid semi-annually, which means twice per year. So I'm paid semi-monthly. Calculating hourly pay. I want you to be able to know how to do this, is be able to calculate if somebody would ever say, okay, I'm paid $1,200 bi-weekly, or $1,200 semi-monthly, or $690 a week. How does that break down into hourly pay so everybody can be kind of, if you wanted to put how people are paid in an order, it's kind of hard to order them when they're all in different formats, weekly, bi-weekly, or semi-monthly. So the easiest way is just to break it all down into hourly pay. So with this one, I've got I'm going to pull up the answers to show you how. The weekly one is the easiest. If you make $690 per week, then simply divide that by the average work week, which is 40 hours in today's world. And that's what your hourly pay is. 690 divided by 40 in my scenario here says this individual is paid $17.25 an hour on a typical 40-hour work week. Now, if somebody is paid $12.50 bi-weekly, well, all you got to do is just take one more step. You've got to get that $12.50 into weekly pay, and then it becomes just like this one. Or you can just know in your head that, okay, in 2 weeks, there are 80 hours instead of 1 week being 40. So you can just take the pay and divide it by 2 weeks of work, standard work week, 80 hours. So somebody making $12.50 bi-weekly is really making $15.63 per hour. Now you might think, oh, I can do the same thing if it's $12.50 semi-monthly, where it's twice per month. Actually, if you make $12.50 semi-monthly, you actually make a little bit less than if you make $12.50 bi-weekly, because bi-weekly is every 28 days. And there's only 1 month that has 28 days. All the other months has 2 or 3 extra days. And so if you're paid this way and you're getting the same rate, then you're working those extra 2 or 3 days perhaps as free. if you're getting paid the same versus this guy who's doing bi-weekly. He's getting paid for those extra 2 or 3 days in January or whatever month it is. So when it's like this, semi-monthly, it takes a little bit more steps. When it's semi-monthly, what you have to do is take the semi-monthly and expand it out into what's the yearly pay, and then start working backwards. So what that means is, if it's semi-monthly, that means twice per month. So, and then there's 12 months in a year. Twice per month, so that means there's 24 pays. So the first thing that I want to do is take the $12.50 and multiply it out by 24 paychecks. That's how much I'm getting paid per year. So this individual makes $30,000 a year. Then what I want to do is take that $30,000 and let's take this out. $30,000 and divide it by 52 weeks. And you could divide it by 50. And I may have you do that in some of the homework problems. I'll tell you that. I'll say assume a 50-hour work week just to avoid some of the little bit messier numbers, because a lot of companies do end up paying you 2 weeks of vacation. And if you have that, then you can divide it out over 50 weeks. And that would be okay to do that as well. It's going to be a little bit different number, but not a whole lot. I'll just show you here the difference. If we had 30,000 divided by 50 weeks, we're making $600 a week instead of $576. And then we would simply take the 600 if we were doing it over 50 weeks and divide that by 40 hours, because I want to get the weekly rate. We're working backwards now, and that comes out to be $15 an hour if you have those 2 weeks of vacation built in. If not, if you are working all 52 weeks, then you would want to do it by 52 weeks. So that's how you can compare, and notice the difference here in these two salaries, one biweekly and one semi-monthly, and there is a difference. There's over $1 difference an hour just by how they're worded, because this guy is going to get paid a little bit more. All right, one of the other things, another thing that FLSA mandates is paying at least a minimum wage. So minimum wage, and I thought this was an interesting fact, back in 1938, minimum wage was 25 cents an hour. And the standard work week was 44 hours. So that means you didn't get paid overtime unless you worked over 44 hours. Now, of course, it's now down to 40. Then the most recent, when minimum wage began to change, the most recent time, it's been quite a while now. It's been 13 plus years from our last low amount. Back in 2007, the minimum wage was $5.85. And before that, it would have gone for $5.85 for a while. And then there would have been a change before then at some point, all the way back to 1938. Well, at this date, they said, okay, we're going to start raising the minimum wage. We're not going to do it all at once, but we're going to do it in gradual amounts over the next 2 years. And between 2007 to 2009, it went up in some increments. And by the end of July 4th, 2009, July 24th, the minimum wage is where it is currently, now 11 plus years into the future. We're still at $7.25. Now, that was one of the arguments in one of the presidential debates. And way back a while ago, this was back in 2014, even, this was still in the debate. They said, well, maybe it's time to change it again. And Obama had in his State of the Union that he would like to see the minimum wage at $10.10. But as a compromise, they said, well, we don't want to mandate that for every state. And it makes sense. States like California and New York, they're probably going to need a different minimum wage than states in the Midwest, just because the standard of living is higher. The cost of owning a home or renting a house is quite a bit higher, so they need to be paid more. It doesn't make sense to have the entire country at the same level, because people in the Midwest or in lower cost of living states, they don't necessarily, it'd be nice, but they don't have to have that kind of money just to meet basic standards of living. Now, is $7.25 too low? It might be in today's world. But what basically the federal government is trying to say is they don't want to mandate and tell states that they have to. They want states to do it on their own. States like Ohio has even done it. California has definitely done it. Other states have their own guidelines that say, okay, in this state, you have to meet this level. So as a compromise, they said at the federal government level, well, if you're going to have a federal government contract, meaning we're going to hire you out and you're going to be working for the federal government to build a road or build whatever, then you have to pay your employees at least $10.10 an hour, because we're going to compensate you enough to where you should be able to do that. But they didn't want to mandate the minimum wage across the board. Now, a lot of times society will dictate what the minimum wage is. All around different places, I see McDonald's, I see Walmart, they're all at $10+ now hiring. They used to be at $9 just even last year. It's starting to go up even now. So even around central Indiana, even in a more rural area like where I live, it's still minimum is maybe $9, but most likely most places are going to start you out around 10 starting wage, as long as you have even a little bit of experience. Now they can start you lower, but a lot of times you'll ratchet up pretty quickly your first few months to prove yourself. So one of the discussion board, the primary thing I'm going to have in the discussion board this week is the topic of, well, what happens if minimum wage does go up? Does everybody get a wage boost then? Because if your minimum wage goes from $7.25 up to $10.10, even that much of a difference, that's a 40% increase if you do the math. Does that mean everybody should get a 40% increase? Because I give some scenarios that you're like, because at first thought you're like, well, no, not everybody should get one. They should just stay where they're at, and then this would be the lowest wage. But you start thinking about it, and I got a scenario here where this guy has been working for 2 years. He started at the low rate down at the bottom. He's worked his way up, done well. He's up to $9.50 an hour. Now all of a sudden the wage rate goes up to $10.10. So his wage, he's happy he gets a little bit of a raise, but the guy who got hired yesterday makes the exact same amount as he does today. He's got 2 years experience, been a valued employee. So is it fair that he only gets $10.10 an hour as well? Or if that's the case, he may get fed up and leave and go find somewhere else. So maybe you got to give him a raise. But how much? Do you give him a 40% raise to make it equal? Because he was making quite a bit more. He was making $2 plus more. So now do you make him up to $12.10 plus an hour? Or what about this guy here? This guy started at $9 an hour, and now he's up to $10.50. New minimum wage law hits, he doesn't get a raise. He's still at $10.50, where this new guy comes in and he's automatically making $10.10, only 40 cents more, where he was making quite a bit more over the bottom minimum wage that the company could hire at. So is it fair that person doesn't get a raise? Should they get a raise of 40%? And if so, I gave the scenario here, it's up to $14.70. What about that long-term manager? You've just devalued that person by giving everybody else a raise, but not this person if they didn't get a raise. So is that fair that this manager who has a little more education, who has more experience, that they don't get to enjoy a raise like everybody else? Is a raise only effective for the lower end employees who are just starting, perhaps the youngest ones? What are you going to do as an owner? That's a big question that you got to think about. You're going to potentially lose some of your most valued employees who've worked the hardest that you can trust if you only pay the people who are brand new and you don't know anything about them. You have to pay them more, whereas you don't pay your good people more. It's something you really got to think about, and it's hard. It's a hard question to answer. But on the other end, if you give everybody a 40% raise because, well, I don't want to make anybody mad, then you've just raised the cost of living 40%. That's just an inflation. And now the people making $10.10 are no better off than what they were at $7.25, because now the cost of rent is now going to be 40% higher. The cost of a house is going to be 40% higher. Everything's going to be 40% higher because the money's got to come from somewhere to pay these people 40% more. Guarantee it's probably not going to come out of the CEO's pocket. So the price of everything's just going to go up. And therefore, the people who thought they were making more money are now right back to where they were in the status. Okay, so I've given you a couple scenarios here. Illinois has a minimum wage rate quite a bit higher than the federal. This was increased just recently. at the beginning of 2020 to $9.25 an hour, whereas Indiana is still follows the federal rate. Indiana has not done anything with hiring requiring a minimum wage, but again, society pretty much dictates that nobody pays $7.25 hardly an hour. Here are a few instances where you are allowed to pay below minimum wage in one of these specific situations here. The biggest one here that most of you will come across is if you're a waiter or a waitress at a restaurant. They technically only have to pay you $2.13 an hour, but your tips have to equal at least $7.25 an hour with your tips. If you don't have tips of that much that gets you on average up to $7.25 an hour, the employer has to then kick in the amount that you were short. So just for example, let's say you had a really bad day. You worked 5 hours and you made $20 in tips over 5 hours. So that's $4 an hour. If you add 4 on to your base pay, that's only $6.13 an hour. That's not even minimum wage. So the employer would have to kick up the rest to get you to $7.25 from that $6.13 that you're at. So that's what that means. FLSA also requires that overtime be paid. Now, there are specific rules about overtime. Not everything is considered overtime. Overtime is simply if you work over 40 hours in a week. It doesn't count. If you work 9 hours one day, that doesn't count as 1 hour of overtime. It only counts if you work more than 40 hours in an entire week. Now, what the week is, the employer can determine, but once they determine it, they have to stay with it. They can't have a week system that goes back and forth. If they say Monday to Sunday is the week, then that's what it needs to stay. It can't be Monday to Sunday this week, and then next week it's Tuesday to Monday, and then the next week sometime it's back to Monday to Sunday. No, they can't do that. So if you work any of those 7 days and your total hours are over 40, you are automatically allowed to get overtime. Now, there are some exceptions. Not everybody gets overtime, but those who qualify, and we'll get to that, who is qualified. If you are qualified, you have to be paid 1.5 times your hourly rate. That is what FLSA stands for, or one of the rules that they require. 1.5 times. Now, employees, you may say, oh, well, I don't want to work overtime. You actually can be fired if you turn down overtime and the employer needs you to do it. They could fire you. It's not set in law that you can turn down overtime and the employer just has to take it. They actually can fire you for not doing the overtime. Working on a holiday or on the weekend does not count as primarily overtime pay. So just because you work on Saturday doesn't mean you have to get paid overtime. It's only if those whole hours added up to over 40. How you can calculate overtime. Basically, these two are going to come up with the same answer. You just have to decide which method works best in your mind that you can calculate it the easiest. What makes the most sense to you? And I'm going to show it both ways, and then you decide. So the first way is simply take what is your normal base pay times your hourly rate for 40 hours. Get that amount. And then add in over here, I worked 4 hours overtime. So then I take whatever I made times time and a half. Add those two together and that's your gross pay. You might think, well, isn't that how you always do it? Not necessarily. Just because I said it this way doesn't mean that some people think of it like this. You take all your hours you worked, so all 44 hours times your base pay. And then those hours that you're over, those 4 hours, you take that times a half of your base pay. And then you add those two together. Either way, it's going to come out the same. It's just what makes more sense to you. So let's do number 4. If we work 44 hours and we earn $14 an hour, how much should this person then be paid for those 44 hours of work? Well, if you do the calculation, I'm going to do it both ways. Option 1 says, okay, just stop at 40 hours, multiply that by the amount you work. So your normal pay is $560 if you work all 40 hours. Those 4 extra hours, you're going to multiply your rate times 1.5. So 14 times 1.5 is 21. So this individual in overtime pay gets 84. So the 560 plus 84 is what they end up earning, 644. Okay, so that if that way makes more sense, stick with it. Don't even worry about option 2. But if that way you're like, okay, I kind of get it, but maybe option 2's works better. Let's see. You take all of your hours that you work, times it by your base pay. So this says, okay, I made 616. That's if I didn't have any overtime and I was just paid straight. This then says, okay, you get half again for those 4 hours of your normal pay. So your normal pay is 14. You get half of that for those 4 hours again. So 4 times 7 is 28. 616 plus 28 gives you 644, the same amount. When you're a tipped employee, the 213, if you do make overtime, the employer doesn't pay you half of the 213 time and a half. They have to actually pay you half of the normal overtime rate. So this is the scenario here is we have gross pay who typically earns $213 an hour, works 42 hours. The employee also had 350 in tips for the week. So how much should they get paid? So I come down here in my example, their normal pay, because I'm going to go back and do it this way. This is the way that makes the most sense to me. I'm going to go up here and say, okay, the 40 hours, they get 560. And then overtime, well, actually, I kind of combined and did both ways. I kind of combined it. And I said, okay, overtime, for this one, you kind of got to do a combination here. You take their overtime, their normal pay, and then plus the overtime, this is their rate, their overtime rate. 363. So you have to add that on to their normal pay. So 213 plus their overtime rate is 576. So you have to pay them 576 an hour. And then you multiply it by 2 hours for the 2 hours that they worked for an extra $11. So their final pay by the employer is 96, and then tack on the 350 in tips. This is what they made per week. So if you wanted to make sure, did they get paid at least minimum wage, take the 446, divide it out over 42 hours, and they made 1062 an hour on average. If you ever figure out that I think I should be paid overtime, but I'm not getting paid overtime, you wouldn't be alone. And there's actually an entire online form that you can go and fill out. And I would recommend, there's even companies here where I live, and that's going to be one of the questions in the homework is you're going to have to write out a little scenario that says, I give you a scenario and you need to determine should this individual get paid overtime or not. And you're going to have to answer questions that say, okay, should this company, do they even fall under the FLSA rules? And I don't give you everything. You're just going to have to kind of determine it based on the facts. And you're going to have to say, okay, is it likely that this company had 2 employees dealing with interstate commerce? And then the other criteria, is it likely that this type of company with this many employees had gross receipts of at least 500,000? So if they meet those 2 criteria, then we can move on to the next step. Are they required overtime pay? Well, we're going to get to that in just a few minutes. And if you think that you do, you meet all the criteria, then you could fill out this overtime claim. And as you can see, back in 2008, this was a report given that 200,000 employees received overtime pay from back wages because of filing this FLSA claim. There is this option if you're a overtime, if you're a healthcare worker, because a lot of the healthcare workers work longer shifts. Some weeks it could be 36 hours that they work. Some weeks it could be up to 48 hours perhaps if they work 4 12-hour days. And so you do, as long as both parties agree, the employer and the employee, you can go to this option where you can do a 2-week period. And then any time that you're over 80 hours in 2 weeks, you get overtime. Or if you do that option, then you also have to give this option as well. So that's why a lot of employers may not do this option, is because then any shift that you work over 8 hours, you have to be paid overtime. So if you do decide, if the company decides and you agree as the employee that you're okay to do this, then either one of these two scenarios would qualify you for overtime. Because they're doing it over a 2-week span, then they have to offer you this option as well, where you're paid overtime for 8 hours a day. So a nurse who works 3 12-hour days and is paid $30 an hour, the employer chooses the optional method overtime, the employee would agree. How much gross income should the nurse receive? So just briefly, we'll go through this one. Oops. The total hours, they work 6 shifts, 12-hour shifts, so 72 hours. So in that scenario, in option part 1, they wouldn't get overtime. They didn't work over 80 hours. But since all of their shifts were over 8, they would meet criteria 2 to get overtime. 24 hours total, because for every shift they worked 4 hours over, so 6 times 4 is 24. So they would get their normal pay, 8 hours at 6 days for 6 days. So that's 48 hours over the 2 weeks at $30. Then you're going to see their overtime is going to be quite hefty. 4 hours at 6 days, so that's 24 hours. We already calculated that. At time and a half, so that's an extra 1,080. So this individual would get paid not only the 1,440, but the entire overtime of 1,080. So if we calculate that out, 2,520 over, if you wanted to do 72 hours, or you could just do the standard, even the 80-hour work week, this person is getting paid over 80 hours, 3,150. But if you only count the 72 hours, they're getting paid $35 an hour. Okay. Piece weight wages and overtime. Basically, this is just saying some people are paid on a per unit basis. And so you basically have got to figure out overtime based on that. So this, sometimes you might say every time you make 1 unit, you get paid, in this case, 3 cents per unit. And let's say you worked 43 hours. So what you're going to first do is figure up how much should you get paid? Base rate, 600. And as you divide that out, the per hourly rate, that's how you would figure out what the overtime is. You would say, okay, this person's paid $13.95. Half of that is what the overtime would then include as your overtime. So half of $13.95 is this. And you had 3 hours, so you get paid an extra $20.94. Total pay of $620.94. Okay, so getting back to what's required, who qualifies. I'm going to get right back into the overtime here in a second. But with the equal pay, that's part of FLSA as well. Equal pay says you can't discriminate. You can't have 2 people doing the same job and at 2 different wages. That would be discrimination. You can't have 1 woman and 1 man making 2 different amounts. Now, there are a couple exceptions, or for doing the same or similar work. The only 2 exceptions, though, is you can have a disparity if it's based on seniority. So that one individual has been there longer, they can't have a higher pay. That makes sense. Or based on merit. So if that person has continually performed well, exceeded expectation, and has gotten raises based on doing the job at a superior rate, then there can be a difference in pay there, as long as you can be able to prove that, yep, they have performed and outperformed based on their evaluations. Now, what employers are exempt from minimum wage, that they don't have to be paid minimum wage or overtime? There are 4 categories that don't have to be paid for overtime. The first one here, executives. If you are in a position where you're a boss and you have at least two employees working under you and you can hire and fire, you are exempt and they do not have to pay you overtime. Most of the time in that position, you are salaried. Salaried people do not have to be paid overtime as long as you meet one of these criteria. Administrative, if you are in the office and you are paid a salary, now this is only for salaried office people. If you are paid salary and work in an office, you do not get necessarily paid overtime. If you're a professional employee, so somebody at a CPA office, you had to be a staff accountant, you have to have a certain degree, that you are in a professional type position, then you are not required to have overtime. Most of those type of people are salaried anyway. Or highly paid. If you're highly paid, you're not necessarily considered overtime. If you earn over 100,000, you don't have to be paid overtime, and that's only for non-manual work. If you are manual work and you still get paid more than 100,000, you still qualify for overtime. So this is for non-manual, highly paid positions. So if you work in a factory and you make good money, hourly rate, and you make over 100,000, that doesn't exempt you. You still get overtime. Non-exempt, a blue collar here. No matter what your wage is, if you're in the working class, you're out doing the labor, you are allowed and you should get overtime. It's not a professional type position. You don't have to have a degree. Okay, finally here in this segment of part one, we're going to look at what counts as work time. Should I get paid for that or should I not? Well, it kind of depends on the job. It depends on your contract. But some of the general rules, changing clothes, most of the time, no. But there are some exceptions. One of them is specifically outlined in law. If you work in the meat and poultry processing, they do have to pay you for the time that you're putting on the protective gear. So if you have to take time and you're not wearing normal day-to-day things that you could wear out in the normal, you could wear out on a Saturday, you may not want to, but you could, then they're probably not going to pay you. But if it's wearing special protective clothing or special anything, then you're probably going to be paid for that. Travel, most of the time, yes, you're going to get paid because it's probably during your normal working hours. Idle time, yes, as long as you're there for the benefit of the employee. So just because the machine breaks down and you don't have anything that you can do, you still have to be paid. The employer cannot refuse to pay you because, well, they could say you're not working. You are working. It's just that you couldn't because of something happening. Rest periods, the answer is no. They do not have to pay you for rest periods. There are a few exceptions, but you do not have to have a rest break. Working at home, yes, that does count, especially nowadays. That's really important. Any work that you do, if you're especially an hourly person, you should record that, and you do get paid for work at home. You don't have to be at the office. Training sessions, if you're in a training, if you're an entry level and you're just starting, then yep, you are paid for that. There were a few exceptions. If you're under a certain age and it's the first 90 days, you can be paid at a reduced rate, but a lot of times the companies will pay you their full amount. Things definitely not covered. Time getting to work, your travel time commuting, that's typically not paid, and you're not going to get reimbursed for that. Let's keep going. The final segment here is the child labor laws. Basically what FLSA says is if you're at 16 years of age or older, you're pretty much qualified to do about any job, and there's not very many restrictions. There is one big one that we'll talk about. But for 14 and 15-year-olds, they do have some restrictions out there. You can start working at 14 if you have a worker's permit. In these general 3 areas where you'll see a lot of teenage help, all the work has to be done outside of school hours. That's one of the criteria. And you can only work 3 days a week for 18 hours total during that week. And you have to be done if you're 14 or 15 by 7 o'clock or 9 o'clock when it's in the summer. For those 16 and 17-year-olds, they are allowed to do about anything except they cannot do jobs that are dangerous. Dangerous jobs like operating power tools or on the job driving things that roofing that could be hazardous. That you have to be 18 to do that. All of the minors, they have to have a work permit, and you can generally get this with a birth certificate or passport. Finally, if you do mess with FLSA, you don't pay your people minimum wage or you don't pay them overtime, there can be big penalties, so you don't want to do that. You want to avoid that. All right, module 2, part 1, there wasn't a whole lot involved here, but make sure you do for that final question in the homework, when I talk about, is this job need to pay overtime? And you'll say yes by or no, by FLSA standards, they meet it or they don't. And then if they do, then you'll want to go to part 2 where it says these type of employees are covered. And you have to state, well, are they one of the exempt or are they one of the non-exempt? So make sure you pay close attention to that and spell out in detail the things that, that need to be included in your answer. Okay, with that, we will stop here. We'll take a break and then we will, you can move on to part 2.